Good afternoon or good morning, everybody, and welcome to another Fintech Nexus webinar. We've got a fascinating conversation on tap today. We have a panel of experts that are going to be talking all about data, particularly about maximizing the value of your customers. So we're going to be really digging in, got a lot of practical examples to share. We have we're going to be covering a lot of ground. So let's kick it off with some introductions here. My name is Peter Renton. I am the chairman and co-founder of Fintech Nexus. My pleasure to welcome you all here today. This webinar is brought to you by Proven Ears. So Kathy, why don't you introduce yourself first?
Great. So Kathy Stairs with Proven Ears. So I'm the Executive Vice President of Americas and absolutely thrilled to be here. A little bit about what Proven Ear does. We are an AI-powered decisioning platform. And what that means is we allow our customers to make data-driven, intelligent decisions for their consumers across the customer journey at every digital footprint. And I'm looking forward to getting into the discussion today.
Likewise. Okay, Al.
Hi, Albert Perriou. I'm the CEO of Zilch's US business. Zilch is a direct-to-consumer credit provider and advertising technology platform. We span two geographies, the US and the UK, and our vision is to ultimately eliminate the cost of consumer credit. So we have a virtual MasterCard accepted wherever MasterCard is, and Zilch customers can either earn cashback rewards on debit payments with our Pay Now product or spread interest-free repayments over 6 weeks with our Pay Over 6 Weeks product.
Okay, Bridget.
Good afternoon. My name is Bridget Hussein. I am the Vice President of Consumer Lending at the United Nations Federal Credit Union, commonly referred to as UNFCU, our acronym. We are honored to serve the financial needs of the United Nations community, serving over 200,000 members around the world.
Okay, Chris.
Chris Martin. I'm our VP of Product Management and lead the digital transformation efforts at Regional Finance. Have a history in the fintech sector, starting with Capital One and rolling into a few different startups and consulting stints. Regional is a $1.5 billion consumer lender and growing, and we'll share more about the business, I'm sure, as we get into the call. Thanks for having me.
Okay, thank you, everybody. So before we get into the meat of the discussion, I do want to kind of just share with the listeners a little bit more about your company, particularly the types of loans that you're doing, and maybe a little bit about your borrowers. So, Bridget, I know you've got a sort of a fairly unique borrower base, but why don't you tell us a little about them and about the types of loans?
Correct. So we are the financial institution of the United Nations employees. That being said, most of our members and the people that borrow from us are not U.S. persons. They are neither U.S. citizens or U.S. residents. So the data conversation is a very interesting conversation for us to have because we're unable to leverage some of the credit attributes that would be commonly utilized by many U.S. lenders. In terms of a product line, we offer credit cards, lines of credits, personal loans, home improvement loans, education loans, auto loans. We also do a large amount of business and international home loans. And we offer mortgages in Kenya and Uganda that are done through my team, the consumer lending team. We also have a large U.S. mortgage operation, but that's a separate area than my team.
Okay, interesting. We'll have to dig into Uganda underwriting a little bit, but anyway, Chris, just tell us about the borrowers and the loans you do.
Sure. We're a consumer finance business, customer facing. We've got branches in 20 states, expanding nationally, mostly secured and unsecured personal loans, higher risk consumers. And what we're really looking to do with those customers is help them improve their credit and restructure their debt as they proceed in a relationship with us.
So how are you securing the loans for the secured loans?
So we have some that are secured through auto refinance. Typically, there's other personal property loans that we do different states.
Okay. Okay. Al?
So Zilch offers interest-free credit with a traditional buy now, pay later structure, with some people may be familiar with. So it's an installment loan. It allows the consumer to defer their payments over four installments. The first installment is due at sale. And then the remaining installments are spread over the next 6 weeks. No interest rate, no late fees. Typically, what you'll find is upfront, we require a 25 or 50% down payment, depending on the risk profile. Customers are typical consumers, so they're looking for flexible payment options when they're making purchases. I think what's a little bit different about Zilch is because it's not a point of sale product, it's a card that you can essentially use anywhere MasterCard's accepted. It means we tend to see a lot of different types of purchases, everything from discretionary, non-discretionary items, small or large. And our demographic actually spans from someone in their 20s all the way up to someone in their 70s.
Right. Got it. Okay. Okay. So Kathy, I want to turn to you and just talk about Proveneer for a little bit about the types of lenders that you're working with today.
Sure. I mean, Proveneer works with all lenders, including some of the topics or the types of lenders that Bridget, Chris, and Al have just gone through. So we work with fintechs, a lot of fintechs at different stages and ranges of fintechs, from startups through to, you know, decacorns in the fintech space. We also work with traditional lenders. We also work in the auto space with captives and other underwriters. We work in the BNPL space. We work with specific customers that may be just subprime lenders or prime lenders, depending on the niche of what the fintech is serving, student loans, student loan underwriting. So we cover the gamut, basically any organization in the financial services space, if you can think of, that needs to underwrite a decision. We likely have a footprint in that place. We are a global, we're talking very specifically about US today, but we are a global company with significant offices around the world. So we do have some niche fintechs in other places. Financial inclusion is also a big space. So working with those organizations that specifically cater to financial inclusion as an example. So a wide variety of customers in different spaces that we serve.
Right. Okay. Okay. So let's dig into it right away here. And by the way, if you have a question for our panel, hit the Q&A button at any time. We will try and get to those later. So I want to dig into underwriting and specifically data used for underwriting. What are the keys to using data for more accurate risk decisions? So I'm going to start with you, Chris. Why don't you give us your thoughts?
Yeah, so there's a lot in that question. Obviously, you've got good data and a variety of data sources. You've got the logic, but around that, you need to think about the processes that you're building, the people that are helping you make those decisions. Strong talent is critical. Constant innovation, ability to iterate rapidly. I think the best lenders that I've seen in the space are test and learn lenders, where they're not afraid to try different things. And in a lot of cases, you have to evaluate a lot of different data sources to really figure out which are the most valuable in what situation. So, yeah, that's what I've seen.
Okay. Okay. So, Bridget, I'm particularly thinking about your perspective as a credit union. What are some of the data challenges, and how are you kind of using data in your underwriting?
Yeah, correct. So, as I mentioned earlier, a lot of our borrowers are not people with a traditional US credit report. So we have leveraged a partnership to get credit data for 15 countries outside of the United States. So we have that in our back pocket. But I'd say a lot of it was that we had to learn to use our own data. So we had to build a custom scoring model in the absence of having a traditional FICO credit score. And then also what we learned over time is that a lot of our borrowers borrow from us again and again. So what we did was build in a data library behind our loan origination system, and that's pulling in the payment performance of their current loans or previous loans that have since been paid off. So we're looking at that string of data, almost that you would typically see on a credit report, that kind of 24 months of data, just to see have their payments performed well. And if we can see these people have borrowed from us before they've paid well, then we can use that as well to provide those instant decisions to them. We're understanding that, our members may be unique and that we don't have as much data available to them as a typical US consumer, but their expectations are the same. Everybody is really looking for a fast and frictionless experience when they apply for a loan. So we're leveraging our own data in order to provide that experience to them.
So what about for those customers that haven't taken a loan yet? I mean, you'll have some data on them because they're a member, but how are you leveraging that for people who haven't taken a loan before?
Correct. So because the United Nations is our sponsor, we also have a large amount of data into like the employment prospects of a borrower, even somebody that hasn't borrowed from us previously. So we just take in their employment information into consideration, and we leverage that custom scoring model to provide them with a decision.
Right. Okay. So Al, I want to turn to you and get your perspective here on, particularly from, you've got a different challenge in some ways in BNPL, because you've got to be instant. You can't say, "I'll give me a week and I'll get back to you," as someone sitting at the point of sale.
Yes.
So what are the keys? What are the keys for sort of the data sources and how you're using data to be able to create this instant approval?
Look, I think she said it well regarding the United Nations and that process. As we have more transaction data, there's some good news with our product. It's 42 days, so it's turning over constantly. So the ability for us to say we should give you less credit, access to credit, or additional access to credit based on your performance behavior is huge. But you probably can't understate the value of open banking. So the idea of like looking into the bank account, a lot of it for us is making sure the customer had comfort around our security and understanding what happens if you share access that gives us more comfort into affordability and income. Without question, if you have access to that data, it gives us a lot more comfort on what exactly can we give you at this point in time, and ultimately start to build a relationship with you. It really comes down to the more, obviously credit score traditional data is important, but the more you can get access to things that dictate their affordability and ultimately their income stream, it gives us a lot more comfort, and we can do that very quickly at that point of sale. And that will differentiate as well between what is ultimately the down payment we need you to provide. So if we feel that there's a bit of a higher credit risk, but we've assessed it and gotten comfort on, if you provide a 50% down payment, that really does eliminate a lot of the losses that you typically would find either with 0 down payment or 25% down. It cuts it in half. So we look to blend that data to get that 360-degree view.
Okay. So Kathy, you work with a lot of lenders. You just described the variety a few minutes ago. What are some of the things that you're seeing best practices in underwriting and the different types of data that lenders are using?
So first of all, I think it's been highlighted very well. The bringing in as much data as you can to understand the customer journey is key. So as many data sources, and we've all heard the term alternate data or alternative data, combined with new data sources like open banking data, through the entire customer journey is very important. And the ability, what I'm seeing is to inject that data at various touch points across the customer lifecycle, very important in originations, very important in fraud, right across the customer journey. The other thing that we're seeing as a huge best practice right now is leveraging AI machine learning in your decisioning and underwriting strategies. And what that enables you to do is machine learning can crunch a lot of data, at a very high speed and in ways that traditionally we couldn't do. And as people, you can't, synthesize that much data. And that allows you to do a couple things. One is it allows you to incorporate many variables that otherwise were undiscoverable, potentially in getting to know your customers. So you can use other attributes and variables to help either inform your scorecards, your models, your just overall fraud mitigation, all of those things, and help identify ways that can ascertain the risk threshold as an example. And this is very important, as I mentioned, in financial inclusion. So utilizing that at very different touch points is important. That also, the third thing, allows you to have real-time treatment. So in the past, traditionally, For different customer treatments, we've had to rely on what is commonly used in the industry as batch data, and injecting data at that point, and then doing sort of, Al touched on this, a backward looking versus a point in time to understand if you're looking at additional products you're underwriting, or what additionally you can cross-sell, upsell to a customer, allows you to have real-time treatment. So you can take all of that data and make a decision at point in time, regardless of what digital touch point they are in across their customer journey. So those are a couple points to summarize. AI ML is something that is really starting to and has influenced the credit underwriting process.
Yeah, for sure. And so let's maybe dig into that right now, because we've seen, AI has been around for a long time. I remember talking to some of the folks at FICO, they were doing it in the 70s and 80s. So I'm curious about maybe Chris. I know you touched on this when we all chatted before we started here. So what are the ways that you're using it, and how is this sort of the whole kind of hype of AI that's happened throughout the culture in the last 6 to 9 months? Is there anything relevant there for lenders?
Yeah, that's a good question, and honestly one, Peter, that I'm still trying to wrap my mind around. There's been a huge amount of hype around tools like ChatGPT and AI broadly. Obviously, as you mentioned, the lending business has been exploring and using machine learning tools for really decades now, with Capital One being one of the pioneers in that space back in the early 90s. So what really is new? I think obviously that there's a lot more just proprietary algorithms that are insanely powerful out there, and so it's probably lowering the barriers to be able to do some of the modeling. I'm also seeing some of the vendors out there connect those ChatGPT and other AI models to proprietary data sources. So I think you'll be able to see those tools sort of tailor an interaction based on your company's data. And I think that could be really interesting, probably push the shift towards, more self-service, more AI-assisted interactions that will continue. I think as it relates to specifically sort of underwriting and decisioning, I haven't yet honestly seen any major impact. It's more of a, at least from what I can tell, sort of a continued evolution on tools that sort of already existed. It's more in these other places that I think there's maybe a bit more of a step change.
So then how are you using it today in your lending operation?
So we have a very good data science team that is using sophisticated machine learning techniques to look at a wide array of data. So I think we use close to 1,000 different data sources or data elements in our risk models to see what sort of pops. Trying to get internal data sources together as well. I think there tends to be disparate silos, customer data, customer interaction data. So sometimes it's hard to really deploy that in the underwriting experience the way you would like, and trying to create consistent variables in order to get those into a model and then have those be reviewed by your legal teams, your compliance teams, et cetera, can be tricky. So honestly, I think it's just really talented people using the latest tools that are available to them and having the greatest exposure to the different internal and external data sources that you could hope to have.
Right. Okay. So Al, how is Zilch using AI models in the underwriting process?
Sure, and I think as Chris mentioned, it's been an evolution for a long time. So it's not like AI just showed up, as you mentioned, Peter, as well. I think the way we think about it is the ability to structure faster, more data is really what it comes down to. So the technology is just kind of caught up. It's now enabling our data science team to just get cleaner data faster, which then we input into the model. So a lot of it could be said also the behavioral data. Like it used to be, we'd have to, it would take time to really build it up and take a look. Now with 42-day loans across a spectrum of different kinds of folks, across different geographies, we're just able to really put that into place much quicker. So it's simply put, I think it's just moving our underwriting data sets to be more complete, faster, to incorporate that then into our decision.
Right. Okay, interesting. So, Bridget, what about you guys? I mean, you're working with, I imagine, very, very different types of data in depending on the country that your borrowers are in. What do you have are you incorporating AI into that as well?
Yes, we have been, I would say, on this path for the last couple of years is learning to leverage our data. We recently went on to a new loan origination system, so that really kind of powered the ability to look at a wide range of data points. And as Kathy said, something like machine learning, AI, that's really allowing us to improve our accuracy by analyzing a wide range of data that's, almost impossible for an underwriter to do manually, especially within a short period of time that the consumer is expecting you to get back to them in. So yeah, I think it's definitely expanded access to credit as well for borrowers. There's a lot of people in the United States with either no file or thin file. And that's certainly the use case that we have as well, is that we're operating with an audience that pretty much has no FICO score at all or credit report. So learning to leverage that data to enable expanded access to credit is really important to us, as well as improving the efficiency of the team to improve our members' experience overall.
Right. Okay, so I want to switch gears a little bit and talk about fraud. And I'm actually going to go back to you, Bridget, and because you're a member organization, I imagine fraud is not as rampant as probably some of the others on this webinar. But I'd love to kind of get a sense of, I'm sure it's not zero, right? So you don't have any. There are fraud. There's fraud everywhere. How are you dealing with it?
Yeah, I wish it was zero. I think we are fortunate that we are a credit union, so our experience is probably more limited than, say, Chris or Al's experience working in their companies. However, we do experience fraudulent applications. We have over time sought to leverage our own data to identify the patterns and the trends at which fraudulent applications occur, and then trying to automate that. Like, we put those lessons learned into the system to flag them as like review indicators, or almost like a red flag for our loan origination system. And that essentially means that the application will get kicked out of like an instant decisioning, and it will go to that annual person to underwrite the loan. We don't want to auto decline those loans. Member experience is important to us, so we really like the concept of auto declining people holistically. But also, it's more than just the loan application at that point. Right. If we somebody that's performing a fraudulent transaction, it's not only that we don't want the loan, but we are also, the whole relationship is now in question. So, we use that data. If we can confirm by a manual intervention this is fraud, we turn that over to an internal security and investigations team that will really consider if we want to maintain any relationship with the person. Right.
Okay. So Chris, what about inside your operation? What are some of the fraud challenges, and how are you dealing with them?
Sure. So we've historically been a branch-based lender, and we're in the process of transitioning to more of a digitally first interaction model. So in a branch model, fraud hasn't been as much of an issue because there's obviously a hurdle there for customers to come in and have a face-to-face conversation. So as we move more of those interactions to the digital space, we're super conscious of fraud, first-party fraud, third-party fraud, synthetic fraud. And so we're currently using a combination of data, raw data and analytics sources. So doing, fraud models using a variety of data elements. We've got some vendors that are really excellent at helping us do that. And then, also using our own internal tools and figuring out the customers who we aren't, quite as sure about, and then pushing those into more kind of in-person or branch assisted channels. The other thing that we're doing is using more credentialed data sources, which sort of fits under that open banking umbrella, where customers are actually sharing things like, their payroll data through through credentialed services like Argon, or their banking data through credentialed services like Plaid or Finicity. And by doing that, you're validating that that customer has a history, right? So if they're able to show pay stubs over a course of a year, that's going to give you a much higher degree of confidence that that customer is who they say they are. So that combination so far has been pretty effective for us, but we're obviously keeping a really close eye on this.
Right.
Big risk.
Yep. No, getting those outside credentials, I think, really makes a difference. Al, I mean, there's been a lot written about BNPL and fraud over the last year or two, but how are you combating it? I imagine it's a challenge, but love to kind of get the lowdown there.
It is a challenge, and I think what we've seen, and I'll try to talk about both, but what you saw a lot was third party, and now it's shifting towards first party in
Right.
many instances. So we have to combat it on both fronts. I think when it comes to Zilch, there's an important distinction a bit with some of our peers, which is we create the relationship directly with the consumer. We do not go through merchants directly to source that customer, which means the end user is our customer. So that direct relationship with our customers helps us because they engage actively with the app or the website in our case. So we can see more in terms of their behavior. When are they checking the app? Where are they? What are they doing to help us protect against fraud? But when you think about onboarding, we have to validate every consumer identity. Obviously, we have a robust KYC process. It scores the applicants based on their strength and longevity of their digital footprint. So you're looking at obviously name, address, date of birth, email. Is that matching to a geolocation data? And when you think about IDV, you have to be very strict. So requirements there, we require a physical copy. We take a selfie to validate true ownership of the account. And I think these are some of the things that Chris alluded to. And there are vendors out there that are actually very strong that we leverage in partnership with our own proprietary data. And then if you think about the actual design of the product, each transaction validates a debit card on file that it's owned by the customer. And we're matching again that critical personal information. I'm looking at to see if the cash balance required to make a down payment is there associated with the transaction, and are they in good standing with their issuing bank? So as we open up the open banking component and making sure they're sharing that information, again, that becomes more critical. We also leverage learnings from the MasterCard network, so we can decline transactions to what could be potentially fraudulent merchants, especially if you've seen the elevated level of recent chargebacks. And then another one on the third party side is we have a virtual card. So not having a physical card does help us because we enable it before each use. So essentially, if you steal someone's Zilch card number, it doesn't really do anything. It's essentially useless to a fraudster. They're unable to enable that card via the app before use. On the first party front, again, it comes back to how much information do I have in terms of transaction history, either with Zilch or ultimately if they provide us access to the bank account, then we can see and understand what exactly is their transaction history, what is their affordability based on existing transaction flow, and again, their income and how is that coming in.
Mm-hmm, mm-hmm. Very interesting. Okay, so Kathy, like you've heard a lot of some of the lenders discuss it here. I mean, you're talking with many others in the industry. What are some of the best practices that you're seeing to combat fraud?
I think that it's been highlighted here, and I think it's potentially specific to the organization, but there are some things that cross regardless of where you are. And one is a robust, as an example, KYC process, especially at the point of origination. And I think one of the things that's required to do that is to have the technology enabled to use multiple data sources. So we've talked about niche providers, and there are some that are excellent in very specific things, but how do you take all of those things and put them together to enable a decision in real time? And we're all talking, predominantly about real time or near real time decisions that need to be made. So it's almost like an orchestration of all of those different data sources that feed into, a fraud model, and, incorporating, again, as a data source is any data you have on them from their own interactions with the organization. So I think that using multiple different streams of data, multiple different data providers, gathering as much data as that's available to combat fraud, and that means, using data sets that we might not traditionally use, obviously combined with traditional data sets that are out there and your own data. So I think best practices is using multiple data sources that reflect the need you have in your business. And then also looking at, across the customer life cycle, how do you maintain that level of fraud mitigation without compromising the experience that your consumer is having? Experiential banking is, I think, very top of mind for the end consumer. And so, personalized journeys across the life cycle are also very important. So understanding your customers. So providing, and customers demand a high level of fraud protection themselves, especially when they're providing data that is very personal to them, banking data, identity data, transaction history data. All of that is something that they have to trust the lender with when they're providing that. And so, managing that, let's mitigate fraud with all the data sources that we have without compromising experience, is something that always needs to be married in an organization. So I think best practices is using as much data as you can in a very short time to make a decision on how you interact with that customer point of sale. If they're coming on digitally to open an account, if they're coming on to access a different account, increase lines, there's all sorts of activities that they can do. And using all those different data sets in real time through robust technology and robust data science to be able to fulfill that need for experiential banking that is a demand of the consumer.
Right. Okay. So I want to dig into the increasing the value. This webinar is titled "Maximizing the Value of Your Customers." So let's talk about that specifically now. The lifetime value of your customers, we obviously all want. We don't want just a one-off sale. Everyone wants people to come back. What? Maybe Chris, I can start with you. What is some of the data that you're looking at to help cross-sell your borrowers?
Sure. When we underwrite our customers and re-underwrite them, as I mentioned earlier, one of our strategies is to help customers who may be underserved and give them access to credit in a way that allows them to expand that access and potentially consolidate higher interest rates, things like that. So to be honest, this has been less historically about us gathering a bunch of great data sources and more about just creating great customer relationships, which has traditionally been more about human interaction. And so we're working to try to bring that sort of really strong level of trust that we're able to build through our associate interactions into the digital environment. And we're deploying, some interesting tools to help with that. I think a big one is helping customers understand their options. And that's, I think, both a data problem as well as a product design problem. There's, quite a bit of complexity in financial products. And when you look at, a core loan and other ancillary products that you can layer on top of that, that are oftentimes really helpful for the customer. That's a lot of information to convey. So the combination of how you do that in a way that allows them to understand it and what are they qualified for. So that's probably the reason I'm in. I wake up every day.
Right.
All of that information, all of those options. How do you bring that all together in a compelling way for the customer, so that it really creates an experience that they enjoy, which I think we're still, as an industry, not quite there yet, is something that we're working through. So I don't think there's any silver bullet there. It's just continue to iterate, find what's working, test and learn, and keep going.
Right. So Bridget, I'm curious about you guys, because you mentioned many different loan verticals that you operate in today. So you've got a lot of opportunity for cross-sell. What are some of the keys for your cross-selling program?
Yeah, well, we do. So on a quarterly basis, and we combine information from our core banking system with our loan origination system data and our marketing database, really trying to understand what kind of customer segment the member is in, as well as that, like what's their lending eligibility based on the last income that they provided to us, their last GTI that we have on file. We're looking at kind of standard credit score information as well as our own payment experience, and some employment information to be able to cross-sell additional lending and even deposit products to them to meet their needs. And the really nice feature that we've been working on is now we want to go to them with like a firm offer, a pre-approval, so that when they log into digital banking, they see this offer there. It's a really nice experience for the borrower. I think it takes out a lot of anxiety in the process of, okay, I don't know if I'm going to put in this effort to apply and I might get turned down. A pre-approval is a great experience for a member to say, okay, yes, I'm here, I see it, I'm going to click, fill in 3 fields, and my application is approved.
Yeah, interesting. Al, let's face it, BNPL is all about the repeat sale, right? You don't want to have a customer come along and just do one sale and then go away forever. How are you increasing engagement with your customers?
Good question. Like, I guess taking it from the top, again, we're direct to consumer, so a bit of a different animal than having to deal directly with point of sale. So again, we are able to market to our customers directly, reach out, see them more engaged in the app than others, and we're not tied to any agreements with merchants where there's pressure to perform a certain way. So as a result of not focusing directly on the merchant, but more specifically, how do we get you to use this product more as a day-to-day thing, whether it's lowering the minimum amount of a purchase, which is essentially almost zero on our app. Tap and pay was something that our users really wanted. So what we've seen in some of our more mature customer cohorts now is you see a lot of folks using Zilch to pay for the coffee or pay for the commute to work or lunch. But it's not really just these large discretionary purchases like electronics or an expensive piece of clothing. It's really how do you get users to use this for those daily purchases? So a lot of our marketing is directed that way. A lot of our app flow is directed that way. Our goal is not to tempt customers into spending more than they can afford. That's where the affordability analysis comes in. But it's how do you get to be more top of wallet payment, given that we don't charge interest and we don't charge late fees. So a lot of our focus is on our journey, and also in our marketing is ultimately, hey, you don't have to put this on a card, a credit card. If you're buying a lunch, you could actually pay that in installments that are interest free without late fees.
Right. Yeah, that makes sense. Okay, so Kathy, I want to turn to you, and I want to add a little element here. Like, people are talking about ways to grow their loan book, but let's talk about risk as well. So, how are lenders growing their loan book today, while at the same time, trying to reduce their risk?
So I think that the panel has touched on a couple things. So one is looking at the data that you have internally to understand the behavior of your customers. So it's know your customer across the life cycle, not just at the point of origination or acquisition. And again, it comes down to how do you use the data? And so internal data is very important because you understand how the customers interacted with you in the past, and you can pull that into decisioning. You still, I think, need to be looking at other sources of data. We've touched on it, open banking data or transaction bank account data that is always pulled into to look at how you're interacting with your customer, what models you're building to interact with your customer, behavioral models, that sort of thing, so that when you do present, as an example, we've talked about cross-sell or upsell a customer. One way is pre-approval, to look at that, as Bridget outlined. The other is to look at next best offer. So how do you use the data you have to provide the next best offer? So a customer may come in and apply for, a credit card and request a balance of, $5,000. And you can, instead of declining that customer, either again at the point of origination or an existing customer, present back to them based on the data you have. You can have a, credit card with a balance of $3,000. We have an alternate product that may serve your needs and you are already approved, click here, put in, Bridget said 3 different data elements, and that gets fulfilled in real time. So I think maximizing it is continuing to use the data that you have, both external data and internal data, to continually understand how your customer interacts with you. And again, pulling in that experiential demand of consumers, personalizing that through these types of offers to customers. And mitigating the risk is, again, using that fraud aspect that we've talked about across every digital interaction that you have with the customer. So marrying the data that you have on them, marrying, the models and the data science that you've used that are all have data elements that are injected into them in order to maximize the value without compromising experience or risk. And I think that that's very important when we talk about making sure we can maximize a customer value. I think we need to balance that with the experience of the customer, because if the experience isn't there in a way that consumers drive, then you can't maximize the customer in general. So, we talked on, as an example, on machine learning, and yes, that's been around and the concept's been around. But having the ability to, as an example, use alternate data variables that are in there to use machine learning in real time to spin up additional models that may be able to be used in a customer journey that may provide you the ability to maximize that customer within your own portfolio. And then using champion challengers, we talked, I think, Chris, it was you that raised up the ability to test different things in market with a certain percentage of customers, or running it on your internal and synthetic data sets to see if there's a way that you can interact with your customer to drive more value, which in turn drives, stickiness and more appetite for them to choose different products with you, as Al said, being top of wallet, so that they go to you with your needs versus, someone else who's marketing to them.
Right. Yeah, it's interesting. And by the way, just a reminder to the audience, if you have a question, hit the Q&A button. We can get to those shortly. It's got me thinking as you were talking there, Kathy, that, Chris, I want to turn to you because you're going through this transition. You've been a physical lender, like face to face, where you're doing loan applications, where you can get identity documents and you can look people in the eye and all that sort of thing. And now moving into the digital realm, what are some of the key learnings how are you trying to kind of duplicate some of what you've had in the in-person into the digital realm, and how are you kind of balancing sort of the needs, some of the things that Kathy was just pointing out there about the user experience and the personalized journeys that you want people to go down? How are you bringing that into digital?
Yeah, that's the other reason I wake up in the morning. So it's a fascinating question, right? So everybody is designing digital interactions to be seamless and straightforward and clean and easy and low effort, that sort of thing. But when you're trying to build a relationship with somebody, is that really the interaction? Is that the only interaction? And so, we're trying to think about what an experience looks like, an origination experience is that combines low friction, seamless, clean digital interactions with human assisted interactions that really target high value points in a conversation. And so, think about kind of complex product sales or debt consolidation opportunities, things like that for us, where the customer may not immediately know they have this card sitting off, that's costing them 30-some% that they would be able to refinance at a lower amount, or this auto loan has a different term here. So those types of conversations. You want to have all the data to get to them, right? So a lot of that's in the bureau, but there are other sources as well, including internal data. But then how do you combine that to really help your customer understand the options, as well as your team understand what they should be kind of focused on in the conversation with the customer? So we're a customer of Proveneer and have been looking at using that software to make sure that we're making some of those decisions. We have other AI platforms that we're using to help make some of those decisions and continue to expand on that. But I think it's a combination of the intelligence and data timed at the right spot with the right product design to help really kind of synthesize the complexity into something your customers and associates can understand, and bringing all that together. So no perfect answer there, but
right.
that's a place that we're continuing.
Right. And what about like, so Bridget, for you guys, I mean, if you're dealing with people all over the world, I imagine you don't have locations all over the world, do you? I mean, you're going to be dealing with these people digitally anyway. Is that like what kind of experience are you trying to give them?
Correct. In that aspect, we would be very different from a typical credit union that's kind of like brick and mortar. For as multiple branches, we have a very, very small branch network, and overseas we have what we call representative offices. They're very similar to what we would consider a branch, just they don't have a teller service line available. It's just really customer service representatives that are available in those locations. But because we cannot be in over 190 countries around the world, that's just economically impossible for us to do so.
Right.
The creation of a fully digital experience is really what we need to provide for our members and for our borrowers. So for us, that's seamlessly integrating multiple vendor partnerships into our pages and onto our branding. So all of the activity that's really required to apply for a loan and to service that loan can really be completed within digital banking. And we also don't want our members to have to call us. It's expensive to make to make an international call. So we really are leading with like a digital first experience so that members can reach out to us at any time or any place in the world.
Interesting. Okay. So you have a question coming in here. In the customer management side, what kind of early warning triggers data are you looking at, which might require credit restructuring to address financial distress? Who wants to take that one on?
I can comment a few ways of what we're seeing across the customer base. And one of them is using, we've talked a little bit about open banking, transaction banking, cash flow banking, and having the ability to look at all of that coupled with your own data on how they're performing, say, in the product historically, or making sure products are linked. So if they have a credit card and a loan, what is the total debt ratio, service ratio that's happening there? And I think it's being very proactive in looking at those early distress and then having a reach out to the customer when you see that. So those are the types of data sets we're having. And I think it's important that we shift waiting for them to be in a distressed environment to being able to be very proactive, educational, bringing on how you refinance, providing alternate products and to the customer to help them before they get into a situation where, we're in a collections, charge off, all of those sorts of activities, and help provide the education and plan on how to get them back on track. So really flipping that to a much more positive experience versus traditionally maybe a negative experience. So specific types of data sets, I can't comment on how each customer uses their own data to be able to do that. But there are triggers, a lot of different companies provide trigger data points that can come in and let you know based on multiple trade lines, based on multiple products that they're running into a cash flow situation. And those could be some early warnings that you can trigger internally to allow you to do an outreach. They're also driving, just to add on to that, I know it wasn't a part of the question, but these types of things are also driving innovation and driving organizations to be able to both service and provide additional products potentially to customers that may be running into that situation on how, not just a traditional refinance, but looking at other products such as a BNPL product versus a credit product. That other institutions are starting to offer in those types of financial instruments.
Some other thoughts on that, Peter,
Sure.
where I would look, and we're doing more of this at the origination step than necessarily in the customer management step, but some of the open banking tools that are customer credentialed that give you access into bank transactions, being able to understand, where a bank account may be, has an average balance of X and that's gone down, or you're seeing a lot of, payments that are coming back, NSFs, things like that. That would be one place to look. I think a lot of cases, if you're waiting on the bureaus to get that information, it's probably not going to be as helpful.
Yeah.
Given the delay. So hopefully, as we continue to innovate around the space, got a more real-time data source that are alternative to the bureaus, we'll have more of these signals that will help us be proactive and help the customers.
Okay, so another question coming in here about fair lending. There has been lots of regulator talk regarding fair lending as AI underwriting or machine learning evolves. How do institutions continue to remain compliant and ultimately avoid any potential or clear fair lending issue? Who wants to tackle that one?
Well, I guess I'll start, but I think we're very sensitive to the fact that we're issuing consumer credit.
Right.
So from a regulatory perspective, we're conscious of the processes that our issuing bank works with. We actually have several state licenses ourselves. In the UK, we voluntarily applied for an FCA license, even though we didn't require one. So look, it comes to the culture more than anything else, and the training, and making sure that you're very hypersensitive to every employee, understanding from a marketing perspective to an underwriting perspective that you're not hitting any issues. So I think it just comes down to as simple as that, like making sure you have the right policies in place, the right infrastructure in place, and being sensitive to not just at the federal level, but the state level.
Yeah, I would agree with Al 100%. I think, AI and machine learning are very useful tools. On the flip side of that, their algorithms can become very complex and they can become really difficult to interpret. So as a lender, you better make sure that you have a staff member that's able to explain why a decision was made, not only to a borrower, but to our regulators as well. We have a requirement to provide a clear explanation for the credit scoring models that we use and why we would choose to approve or decline a loan application. And I think on top of that, one of the major things that regulators look out for is that bias, that there is no discrimination in your automated or artificial intelligence or any machine learning models that you use. So my recommendation would be to test it and make sure that it's tested by not one person, but several people, to make sure that the bias is non-existent.
Right. And I mean, there's a lot of work being done, I think today with, there's lots of different ways that you can do that. And I think there are companies now that are just specializing in helping trying to detect bias and overcome bias in AI lending programs.
Just one thing to add there that may be helpful. Looking at the input variables that you're using, that you're basing those models on, and making sure that ageism doesn't creep into there, location doesn't creep into there. So just spending a super close eye on the data that serves as the foundation for the decision. Right.
Okay, so I want to talk just briefly about embedded finance, because embedded lending, shall we say, or embedded finance in general is really opening up new doors. I mean, you could argue that BNPL in its entirety is an embedded finance product. What are some of the ways that you guys are taking advantage of embedded finance?
I'll start, but for us, again, we're a bit of a different animal because we're direct to consumer. But what we found is, as we've aggregated a loyal user base, merchants have been approaching us to try and set up programs. So for us, it's figuring out marketing is actually great. So awareness is half the battle, right? So making sure that we have additional marketing spend that necessarily we don't have to consume completely, that it helps us with our CAC, number one. Two, credibility. So if you're associated with certain merchants and brands that they're using on a regular basis, that absolutely plays a role as well. So we're taking advantage of it. From our perspective, we spun it a little bit differently, which is we have the user base. So some merchants are coming to us. We're also leveraging it now and saying, hey, we've built a base. How do we work together on the marketing awareness front? We've also found that if they're using one type of product, they're typically purchasing a different product that's a related topic. So can we also leverage that in terms of finding those merchants as well.
Okay, so let's maybe, I'd like to close, unless there's any more questions. I would like to close with sort of a more of a, kind of looking towards the future. And, we've talked a lot today about, different data sources, different ways to analyze data, and, the explosion in AI and the technology there. But as we look sort of more to the future, when particularly when it comes to lending operations, what improvements still need to be made? What would you like? What would be on your wish list that we don't have today, that technology maybe can be developed in the future? So just thought I'd throw it out there as with some closing comments.
I'll maybe start on that one. I would like to see, if it's on the wish list, I would like to see more of a customer-backed company begin to structure itself as a consumer advocate and having kind of access to that customer's data in a way that is more customer controlled and customer friendly. So, we've grown up around bureau data being the primary source of underwriting, and the business model for the bureaus is very much a lender-backed business model, and as is most of these data companies. And if you've ever tried to interact with the bureau to, correct any of your data, you know that is not necessarily the most customer-friendly of institutions. And so we have an opportunity with, all of the digital tools that are out there now, and the ability for customer to have much more of a direct interaction with a lot of these companies. I'd love to see somebody take advantage of that and really have, the customer be the source of the business model, not necessarily kind of always that be driven by the lender.
Mm-hmm.
Yeah, that's well said. I was thinking, we always speak about this, but I'm not sure anyone's executed well on it, is the idea of some additional consortium of data. A lot of our industry, it's not competition necessarily, it's co-opetition. Like, we all work together. The more data we would have on a consumer, the better. So if there was some extent where they would either opt in and they choose who, or allow themselves to be part of this information, it would be nice, because I think there's a lot of data we don't necessarily share between lending partners, which ultimately, if we had all that data in one place, we're probably making even better decisions and more transparent decisions for our customers.
Okay, well, with that, I think we'll leave it there. Thank you very much, Kathy, Al, Chris, and Bridget. And thank you, of course, to Proveneer for sponsoring this session. It was a fascinating conversation. And of course, thank you to the audience for watching or listening. Have a great afternoon, everybody. Thanks a lot.
Thanks,
Thank you.
Peter.
Thanks, Peter.
Thank you.
Have a good one.
Yep, bye.